The world is experiencing a global pandemic, causing unemployment to rise to near the levels of the Great Depression. The stock market has become so unpredictable that things might not look great to them at the moment. But in our opinion, this new world offers opportunities more than you might first think, especially if you know where to look. The internet is an unbelievable tool for investors and entrepreneurs. Hey go-getters, welcome back to The Early Investors, another profitable episode where you can learn how to become financially free. In today's video, we'll be showing you how to go from $0 to millionaire, investing for beginners. Want to become the next Warren Buffett? Stay with me to find out all the tips and tricks to save your hard-earned money. Before we jump into the video, make sure to subscribe to our channel for more business-related content. The biggest misconception about investing is that it's only reserved for the rich. This could have been the case about 10 years ago, but things are very different today. The barrier to entry is no more. Companies and services make it their mission to make investment options available for everyone, including beginners and those with minimal money to invest. Therefore, the good news is that there is no excuse to skip out because investing is the best way to grow your wealth. Having the correct mindset and investment strategies can help you achieve this goal at the earliest. You will need to have a solid, consistent investment plan which gradually builds your wealth over time. Longer-term investments will often give great returns. The key to becoming successful through investment is not to get overwhelmed and distracted by the latest trends. The more you learn, the more you earn is the key strategy in building wealth through investing. Paying off any high-interest debts will make it easy to save money and later turn it into an investment. In this video, we will be discussing the most common ways to start your millionaire journey. Number 1. Index funds. An index fund is a collection of investments that you can put your money into and own a percentage of the entire thing. This often gives you fantastic diversification and protects you from poor stock choices. Let's say you've got $1,500 and let's say you invest in Apple stock. They are a big company, so you might think your money is safe, and let's assume that the company takes a turn for the worst, causing the stock prices to crash. You could end up losing the majority of your investment. This is where index funds come in. Instead of just putting your money into Apple stock, you could tie that $1,500 into something like S&P 500 index fund, which gives you small shares in Apple, Microsoft, Amazon, Facebook, Visa, Disney, and many more. You are the shareholder of all these major companies. If something happens to Apple, it would then be balanced out by your index fund's other investments. Now, you might come across people trying to convince you that mutual funds are superior. Index funds are like mutual funds on autopilot. Rather than employing a professional manager to build and maintain the fund's portfolio of investments, index funds track a market index. A mutual fund is very similar to an index fund, except it is controlled by a brilliant person whose job is to pick the fund's stocks. The purpose of the mutual fund is to beat the market and get better results for the investor. However, in the vast majority of cases, you would be much better off putting your money into a simple index fund with less risk and often a greater return. This is because index funds charge extremely low fees. The S&P 500 charges 0.07% annually, and mutual funds charge high fees between 1 and 2% of your account balance annually. If you invest $10,000 into a mutual fund, then $200 would go straight to that fund manager's wallet every single year, even if he causes you to lose money through poor stock choices. On the flip side, if you had the same amount of money invested in an S&P 500 index fund, that's only $7. Yes, just $7 would leave your account annually. This is because index funds are passively managed and therefore don't have to pay a manager who may or may not be doing a good job for long-term investments. Index funds will benefit long-term investments. Number 2. Real estate. Real estate is a favorite investment option for most investors. One of the key ways investors make money in real estate is to become a rental property landlord. Buying undervalued real estate and selling it for a profit usually works best. Here are some key strategies that will make your real estate investments profitable. Number 1. Buying undervalued property and flipping it for a profit is basically instant money. Number 2. Buying properties into an appreciating area that will likely increase your property margin when you try to resell it. Number 3. Low interest loans help you buy the property and later rent it out. Number 4. Forced appreciation. Renovating and fixing the home can drastically improve the property's value and increases the chance of getting the property to be sold for a good margin. Number 5. Renting out property is a great way to pay the loan. A great way to assess the property's value is by using the 1% rule, where the monthly rent should be at least 1% of the property's total value. Just like everything in life, nothing comes easy, and real estate is no exception. This type of investment requires a lot of work to find profitable properties. The experience will also play a vital role in you making money through real estate. A good credit score and sufficient income are required to get a loan from the bank. Managing tenants is also something that needs to be taken care of, as it's not as easy as you may think it is. Real estate investments are also risky, intricate and time-consuming, and it is also highly competitive in nature. If done rightly, real estate can have the potential to make a lot of money with higher returns. Number 3. Individual stocks. Now, we're starting to get serious. It's time for individual stocks. There is a certain amount of risk that comes with investing in individual stocks. But if you pick your companies well, then it can be inspiring, as there is the potential to make a lot of money. There are 2 different ways to make money from individual stocks. The first is to buy low and sell high, and the second is investing for dividends. Individual stocks are a desirable choice for a lot of people. This is primarily because you can buy into the market and sell whenever you want. Unlike real estate, when you have to look for a buyer and go through all of that whole selling process, you can have a complete access to your funds at the tap of a button. Individual stocks are high-risk options, so make sure you understand where you're trying to invest your money. One more thing to note, however, is to use the money that you can afford to lose. Number 4. High-interest savings account. The first investment is a high-interest savings account. This is a 1 out of 10 on the risk scale, basically the lowest possible risk you can have. Some banks worth looking at that consistently have a good interest rate are Ally Bank, Marcus by Goldman Sachs, and Citibank. Number 5. Businesses that buy and sell items. The next option is investing in a business that buys and sells items. The risk on this really depends on how good you are at finding great deals, but I'll give this a 4 out of 10 on the risk scale. The good thing about doing this is that you can buy and sell something you're interested in and have knowledge about, which can lead to bigger possible returns. Number 6. Investing in yourself. Networking is the ultimate key to a world full of opportunities. Networking also improves your social skills and will pave the way to explore more things than you otherwise would have missed out on. Improving your skill set is another important way to invest in yourself. Learning skills that could bring monetary benefits will help throughout the journey of investing. A more reliable way to get rich with just $100 is to invest it in a course, book, audio program, or event that will help you improve yourself. Spend it on developing new skills, gaining knowledge, and making powerful connections. When you invest in yourself, you can't lose. Getting the highest paid job possible is crucial to making money to invest. The goal is not to get comfortable, as the comfort zone inhibits your growth and makes you forget your dreams. So it's time to get out and start doing things that you normally wouldn't do. One of our favorite quotes from George Adair states that, "Everything you've ever wanted is sitting on the other side of fear." That's about it, folks. We hope you liked our video. Do subscribe and like the video. Don't forget to press that bell icon to notify you about the new videos that we upload onto our channel. Do share your thoughts in the comment section below. Also, don't forget to share the video with your friends too. See you in the next video.